ARK Invest's expected value for Tesla in 2029, $2,600 per share. As I record this, Tesla stock's currently under $180 a share. So roughly a 14x increase in a 5-year period. Keeping in mind, historically, ARK have been on the money, literally, with their long-term Tesla valuations. Now, before we get to what's in ARK's valuation, let's first look at the exclusions, the stuff they're not including. First, 2029 model considerations that are not key drivers of our price estimates. Optimus. We assume that Optimus will have minimal impact on our price target. Over the next decade, just to be clear, their price target's over 5 years. Now they're talking about the next decade. We expect Tesla to become a leading manufacturer and service provider of robots that move through physical space, as it will have the opportunity to leverage learnings from robotaxis, as well as its in-house inference chips, training compute, and manufacturing scale. Tesla expects Optimus to be completing useful factory tasks by year end, and I just got to jump in here. Tesla kind of jumped the gun yesterday, disclosing that there are currently 2 Optimus humanoid robots working autonomously in one of Tesla's factories already. So credit to ARK here. They called it. They didn't know this news would drop. They'd finished this valuation model and the entire article prior to then, but it turns out that there are already 2 Optimus humanoid robots performing useful factory tasks in one Tesla factory. Assuming that it were able to subsume 10 to 20% of Tesla's labor hours worked, with productivity equal to or twice that of its human counterparts, Optimus could save Tesla $3 to $4 billion or 1 to 2% in manufacturing costs in 2029. Our research suggests that generalizable humanoid robots represent a $24 trillion global revenue opportunity at scale, around 50% of that in manufacturing. Should Tesla decide to sell Optimus externally, they will, Tesla could capture a significant share of this multi-trillion-dollar market, though the meaningful commercialization ramp is likely to happen beyond the 5 years captured in this model. So ARK are essentially suggesting here Optimus will have a negligible impact over the next 5 years in terms of Tesla financials. And I tend to agree. Again, if you guys have seen my own valuation model, you know when I think the first Optimus spots are delivered to customers, when the revenue starts flowing in. It does start having an impact toward the end of this decade, but it's not really until next decade and beyond that things really, really ramp up. In other words, Optimus makes no fucking difference to ARK's 5-year price target. But they do believe that it's a gigantic multi-decade trillion-dollar opportunity. Stationary energy storage. We estimate that Tesla's stationary energy storage growth will outpace its vehicle growth, accommodating 850 gigawatt hours of energy in 2029. If batteries are a limiting factor, however, Tesla is likely to prioritize robotaxis to generate a higher return on investment, as shown below. What we're looking at here is 2029 average EBIT per kilowatt hour deployed in stationary energy storage, electric vehicles with ride-hail, and electric vehicles with robotaxi. In other words, ARK believes that Tesla will prioritize the battery cells into the things that bring in the 466 per kilowatt hour versus the 16. So the key terms here are if battery cells are limited. Their assumption, I guess, is that they will be. Otherwise, Tesla could have their cake and eat it too. So again, stationary storage products, despite the fact that they are hugely profitable and there's insane demand, don't meaningfully impact ARK's 2029 valuation. And now, the business opportunities that are not included in the valuation model at all. Tesla Semi. Tesla plans to commercialize the Semi in 2026. We do not believe that Tesla Semi will contribute significantly to Tesla's value within our 5-year investment time horizon. Therefore, they're completely excluding it. Supercharging network. This year, Tesla solidified its technology as a North American charging standard, with buy-in from Ford and General Motors and partners like BP, which is funding incremental supercharger expansion. Now, with outside capital, we believe Tesla is likely to reorient its funding toward charging infrastructure optimized for robotaxis. While essential for electric vehicles, according to ARK's research, superchargers are unlikely to generate significant revenue for Tesla. Jumping in here, I agree. I mean, they will generate significant revenue in absolute amounts, and most companies would shit themselves with excitement to see the kind of numbers that Tesla's supercharger network is going to do long term. But it's just relative to other elements of Tesla's business, supercharger revenue is a speck. And again, you guys can see my own valuation model, my estimates for the supercharger network over the next decade. Link in description, join Patreon at the investor level and above. It's not nothing, but relative to the rest of Tesla's business, you may as well ignore it. Even if the supercharger network were to continue growing at current rates and its utilization were to increase from around 11% on average to 34% typical of gas stations, the financial impact on our price target would pale in comparison to the scaling of Tesla's robotaxi business. Exactly. And now, a massive, massive exclusion. I was going to say that one more time. Massive exclusion. FSD licensing. Tesla is currently in discussions to license its FSD software to one automaker. While potentially a monumental event for Tesla, based on traditional automotive design to production timelines, non-Tesla FSD equipped vehicles probably will not debut for years. Even so, much like over-the-air updates, automakers might trial FSD on select vehicle models, perhaps prioritizing electric drivetrains, which recently have pulled back on traditional auto production schedules. That said, our research suggests that FSD licensing is unlikely to move the needle on Tesla's revenue or earnings during the next 5 years. Now, they kind of have a point. The question I have, because it will take some time for legacy auto companies, once they've decided to license this software, to actually implement, they're going to need Tesla computers in their vehicles, the cameras in the right places, blah, blah, blah. There might be a lag of maybe a couple of years, but in my personal opinion, it's inevitable. Tesla's going to have the safest, most capable autonomous software, and everyone's going to want it. But again, over the next 5 years, the impact may be minimal, but ARC are really emphasizing unlikely to move the needle in the next 5 years, therefore completely excluding it from the model, but it is likely to be a big needle mover in the future. The question is, have any agreements actually already taken place? Are any automotive companies already in the process of implementing this? Because again, there is going to be a bit of a lead time, so we wouldn't know yet. Once again, FSD licensing, in my own valuation model, doesn't have a massive impact until the later part of this decade. But boy, oh boy, things get ridiculous beyond then. Another exclusion, AI as a service. Tesla's plans to offer distributed AI inference as a service and dojo training as a service probably is outside our 5-year investment horizon. While integrating distributed inference as a service into personally owned vehicles could present challenges like unstable Wi-Fi connectivity and bottlenecks in scheduling during owner downtime. A robotaxi fleet could address some of the issues. Dedicated infrastructure for charging and stable internet access in conjunction with dependable schedules for vehicle driving hours could result in an organizational structure that can support AI as a service. And we're almost done on the exclusions. Tesla began production on its next generation Dojo tile this year, signaling progress despite management downplaying the Dojo effort during its first quarter earnings call in January 2024. Dojo could become a meaningful contributor to Tesla's internal compute capacity, but similar to last year, we do not expect that external use of Dojo will contribute meaningfully to Tesla's value over the next 5 years. So everything that we've just looked at, the exclusions from the ARK Invest valuation model, are either only a few $1 billion, so we'll just ignore it, or much more likely to have a meaningful impact beyond that 5-year horizon. Together, these exclusions alone over the next 10 plus years could themselves represent literal trillions of dollars of value. But, as ARK points out, that's beyond the 5-year investment horizon. So just consider that for a moment. ARK Invest excluding potentially trillions of dollars worth of value from Tesla in their 5-year model because it's a little bit further into the future. Yet despite those exclusions, ARK's updated open source Tesla model yields an expected value of $2,600 per share in 2029. The bull and bear cases, which are tuned to the 75th and 25th percentile, basically 1 in 4 chance each, are approximately $3,100 and $2,000 per share, as shown below. So ARK's bear case, the 1 in 4 downside scenario, still $2,000 a share, more than a 10 times increase in Tesla's valuation from where we are today, 5 years from now. And for those who don't know, this is built as a Monte Carlo simulation, which has 45 independent inputs to simulate a range of potential outcomes for the company and its stock. And here are the targets in table form. Expected value, 2029 for Tesla stock, $2,600 per share. The bear case, $2,000 per share, 25% chance. And the bull case, $3,100 per share, 25% chance. What we're looking at here is the range of different outcomes grouped by each 1% probability. There's also an example of if Tesla completely fails to solve autonomy, still $350 per share. And clearly a fairly extreme upside case. Looks like almost $5,500 per share in the absolutely everything that could go right does go right scenario. Now, as I've said in the past, I really believe this is the way to think about how to value any company because the future is unknown and there are a range of probabilities. Some things very likely, some things less likely, and the impact of these varies. So why on earth would anyone have the audacity to think that they can accurately estimate how things are going to play out in a single scenario and go, well, that's going to happen, therefore that's what it's worth, instead of trying to think probabilistically, okay, what if things don't go as well as you'd expect on this? How likely is this particular business model? For example, will Tesla solve autonomy? When will the first robotaxis deploy, if at all? How much will they charge per month for autonomous software? Will it be this much or this much? And then weight all of these by probability to come up with an expected value. In ARK's case, $2,600 per share. I've yet to hear a reasonable explanation as to why anyone would not value any companies like this with a range of probabilistically weighted scenarios. Unless, of course, they have a time machine and they know the actual outcomes ahead of time. ARK estimates that nearly 90% of Tesla's enterprise value and earnings will be attributed to the robotaxi business in 2029. Meanwhile, electric vehicles could approximate a quarter of total sales and around 10% of Tesla's earnings potential, as we believe the robotaxi business will have much higher margins. And we can see a breakdown of revenue, EBITDA, aka earnings, and enterprise value for each business section. Electric vehicles in purple, robotaxi green, human-driven ride-hail, which is so tiny you can barely see it on any of these, in blue. Insurance is the darker color, and the light gray is stationary energy storage. As we can see here, autonomy, 63% of revenue, 86% of EBITDA, and 88% of enterprise value, making the rest of Tesla's business look like a rounding error. This $8.2 trillion of enterprise value, by the way, that's the $2,600 per share. World's largest companies today, if you're lucky, $3 trillion, ARK expecting Tesla to be an $8.2 trillion company in 2029, 5 years from now. Here's an example bear and bull case. And just to be clear, ARK doesn't have a single bull or bear case because they dimension the outcomes as the 75th and 25th percentile output from the simulation. Again, it's pretty nerdy, but they've got a range of outcomes, 45 different scenarios, different inputs, probabilistically weighted, and they're just lining these up. The base case is smack bang in the middle at the 50% mark, halfway between, right? 2023 actuals here, we've got cars sold, electric vehicle revenue, autonomous ride-hail revenue, total gross margin, total EBIT, enterprise value, market cap, share price, free cash flow yield, right? So the example bear case outcome in 2029, 5.8 million vehicles sold. An example bull case for 2029, 14.4 million vehicles sold. I'm kind of curious how this compares to mine. So I'm going to check out my 2029 bull case now, just for reference. Let's see here. Or you can't make that shit up. As I record this, my Patreon supporters can fact check me. My 2029 vehicles sold bull case for Tesla, 14.52 million vehicles. My 2029 bear case, meaningfully higher though, 7.86 million versus 5.8. But interesting that we're in a similar ballpark. ARK's bear case EV revenue going from 81 billion in 2023 to 250 in the bear case, or in the bull case, nearly $400 billion. And the most important line, autonomous ride-hail revenue, 2023, zero. 2029 bear case, $603 billion. What? $603 billion. Bull case, $951 billion. As compared to EVs, less than 400. Clearly, autonomous ride-hail is carrying ARK Invest Tesla valuation, and spoiler alert, also mine. Total gross margin, 2023, 18%. Bear case for Tesla, 56%. Bull case, 53%. Now, some people might go, wait a minute. Why on earth would the margin be lower in the bull case than the bear case? Anyone? I'll take that one. I have a similar anomaly in my own valuation model in some scenarios. Long story short, if Tesla can make more affordable some of their products, for example, cost per mile in a robotaxi becomes dramatically lower, there's going to be a hell of a lot of additional miles traveled, right? Because more people can afford to use Tesla robotaxis. But if the cost is lower, it's possible that Tesla's making a little bit less money per trip. It's just there's a lot more trips, meaning the actual margin in percentage terms may be lower for the business overall, but they may be doing significantly more revenue as a result because many more people can afford to use a service. By the way, gross margins in the 50% range, this is software-like margins. Crazy. Now we're looking at market cap. A $7 trillion market cap in the bear case example. Basically 11 trillion in the bull case. Dude. And this is fascinating. The share price and compound annual growth rate, $2,000 and a 56% compound annual growth rate in the bear case example. $3,100 share price and a 69% compound annual growth rate in the bull case example through 2029. Incredible. And now here are the key updates to ARK's 2023 model, as in what changed from last year. Updated autonomous driving assumptions. We believe that Tesla will launch a robotaxi service within the next 2 years, and the probability Tesla fails to launch a robotaxi service within 5 years is fuck all. I just translated the Latin for you guys that aren't native Latin speakers. Here are the percent of simulations indicating first year of Tesla's robotaxi commercialization. 58% of the simulations indicate 2025 for the first robotaxi. 38% 2026. 4% 2027. And now we get to the absurdly low 0.03% in 2028, less than 0.01% in 2029. So again, ARK's simulations so heavily weighted towards robotaxis happening at the absolute latest sometime in 26, but much more likely 2025. I tend to agree. In 2021, I thought that it was pretty probable that by late 2024, Tesla would begin the first operational robotaxi. I don't think this is super likely today, but I think it is possible. Still in my bull case. Funnily enough, and again, my Patreon supporters can fact check me. Latest version of my Tesla valuation model with the differentiated cases. The base case, first robotaxi launch, occurs in 2025, and the bear case in 2026. By the way, again, if you guys don't have access to my valuation model and you like it, it's almost like a watered down Monte Carlo simulation like ARC. So I've got 4 independent scenarios that are probabilistically weighted. Just click the link in the pinned comment, join Patreon at the investor level and above. Now, the reason I'm going through my own estimates a little bit with ARC is just to sort of fact check myself, give a bit of a sanity check. Are there any major points of contention or disagreement, or are we fairly in line? Again, my valuation model, iteratively updated as there's new information or I decide to tweak things. So it's interesting to see whether or not we're on a similar page. And it turns out with the robotaxi timings, couldn't be a more perfect match. Now, of course, we don't know yet because, again, the future is uncertain. But it is interesting that in terms of robotaxi launch probabilities and timings, ARC and I are on the exact same page. And this is a classic example of why, again, it's insane not to have a probabilistically weighted valuation model with a range of different scenarios. Because if robotaxis are going to have this much of an impact on Tesla earnings and valuation, we saw close to 90% of the company's value in 2029. But the launch year is unknown. You'd have to be a moron not to consider, wait, what if they launch in this year or this year or this year? How does that affect the valuation? That's almost as dumb as assuming that they'll never launch. Well, unlikely. If we were to eliminate the possibility of a robotaxi network for our model, our price target would be $350 approximately. Note that in cases where robotaxis do not launch, Tesla could launch a human-driven ride-hail service for both strategic and tactical reasons, as we have analysed previously. From a modelling perspective, we previously estimated that Tesla's take rate would be 40 to 60% on average, higher than Uber's 20 to 30% take rate. This year, we fine-tuned our analysis to include the assumption that initially, Tesla will own and operate its vehicle network, retaining all revenue per mile for the first 1 to 3 years. For later years, we assume that third-party companies will own and maintain the vehicle fleet, earning around 20 cents per mile for their services, while the remainder of revenue per mile accrues to Tesla. In effect, Tesla's take rate is around 80% on average in the final year of the model. Meanwhile, we revised our median case expectation for the start of a robotaxi service to late 2025. While we pushed back our median launch date for Tesla's robotaxi service by 1 year, we remain confident that the service will launch within the next 5 years. With the release of FSD V12, Tesla transitioned to a neural network that learns from video data and directly controls the vehicle, eliminating over 300,000 lines of manual code. This update has enabled human-like and, in some instances, zero-intervention driving by leveraging Tesla's significant data advantage, which now exceeds 1.3 billion cumulative FSD miles. According to our research, Tesla is accumulating data at around 110 times the rate of Waymo, as shown below. I guess they should probably rename to way less in that case. This is so ridiculous, I kind of need to zoom out to just capture it. Millions of miles annualized, data captured. Baidu, Waymo, paper-thin slice, Cruise, doesn't even register on that. That's just insulting. Oh, fuck me. That's hilarious, though. Shout out to the low-key trolls who did that at ARC. That's how little Cruise is collecting. And Tesla, towering over these guys. I literally have to scroll up for it to all fit. Ridiculous. Furthermore, our research suggests that a Tesla in FSD mode is around 5 times safer than a human-driven Tesla, as shown below, and around 16 times safer than the average car on the road, also shown below. No longer constrained by AI training compute, Tesla's accelerated software updates are enhancing performance and safety. As a result, Tesla should be able to demonstrate superior, statistically significant safety metrics and receive regulatory approval for its robotaxi network. Now, there are some key words here. Tesla being able to demonstrate, as in prove, superior, statistically significant safety metrics and present that to regulators. Hey, regulators, here's the fucking facts, bro. Look how much safer this is. Don't want blood in your hands, right? Approval. Thank you. Done. Next minute, robotaxis launch. And the data, once again, miles per crash on surface streets only in thousands of miles. Tesla in FSD 2023, 1 per 3.2 million miles. Human-driven Tesla, 1 every 588,000 miles. Waymo, that's awkward. 1 per 476,000 miles. So humans driving Teslas safer than Waymo's robotaxis. Interesting. National average, 1 per 192,000 miles. And awkward. Cruise, 1 every 43,000 miles. Yikes. Tesla plans to unveil its dedicated robotaxi vehicle in August 2024. Less than 2 months from now, by the way. While Tesla could transform its current fleet into robotaxis. And by the way, in my opinion, they will, but let me be clear. It's going to be an opt-in program for existing Tesla vehicles. Would you like to become part of the fleet? Cool, you can supplement our dedicated robotaxi vehicles. That's how it's going to work. And this is also going to allow Tesla to really fine tune their robotaxi, their cybercab as they're calling it, to suit the 80+% of people using transport as a service, and for additional vehicles from the existing Tesla fleet that could seat up to 6 people, depending on configuration, to fill the void. In other words, Tesla could easily make a 2-seater robotaxi, and that could be it, because in the instances where you need to carry 4 or 5 people, or even 6, there's other Tesla vehicles that could be supplementing that. Plus, I also actually think Tesla's probably going to have a much higher density, almost like a 8, 10 or 12-seater van type of cybercab as well. Time will tell. But these are going to be irrelevant relative to the number of dedicated robotaxis Tesla puts on roads. So, we believe a custom-built cybercab reflects increased confidence that its autonomy software will allow Tesla to scale the robotaxi business. Meanwhile, FSD's 30-day free trial in North America has increased Tesla's data library, as would the rollout of FSD in China, which Tesla is rumoured to launch soon. Lastly, the inclusion of ride-hail app renderings in its latest earnings report teases the release of that business model, which could launch first with human drivers and pave the way for their robot counterparts. Our confidence in Tesla's ability to launch a robotaxi network within the next 5 years has increased considerably, and I've got to jump in here. Me too! There are still a lot of unknown unknowns until Tesla's end-to-end video rewrite of the entire software. Prior to then, they get to a roadblock and fuck, didn't see that one coming, whatever. The path to solving autonomy was not clearly lit. So there were still some potential obstacles along the way, and Tesla would encounter those occasionally as they move further along. But the complete rewrite, removal of the 300,000 lines of code, and training purely end-to-end on video, but not just training, but then seeing the results and the capabilities, that was a moment when, oh fuck, no more roadblocks. It's now just a matter of time. My confidence in terms of timing, and importantly, getting the solution, I figured eventually they'll get it right, but who knows exactly when. My confidence has done nothing but increase, and it went vertical after V12. As a result, its business model should transform from one-off vehicle sales to a recurring revenue base as every car becomes an AI-powered cash flow generation machine. What a line. And they're right. And now the updated Tesla manufacturing growth rate. In our expected value case, after a flat to up year in 2024, vehicle production increases 45% per year through year-end 2029. And again, it's kind of stunning to think about a number like that, starting from a base of almost 2 million. After this year, we expect that Tesla's ability to scale will be a function of management bandwidth and Tesla's ability to open new factories. As production scales from around 1.8 million units per year today to around 6 to 16 million units per year in 2029. Again, it's uncanny how close ARK and I are on these. Again, my bear case in 29 is 7.86, they're around 6. My bull case is 14.52, they're around 16. The law of large numbers should lead to lower growth rates. Robotaxis likely ease manufacturing scaling by simplifying vehicle design as well as generating additional capital from highly cash flow generative rides. We also expect that most robotaxis will be sold to fleet owners rather than to individuals, potentially simplifying the sales funnel. And we previously covered the exclusions, factors that were not key drivers, and then the stuff that wasn't included at all. And by the way, much like autonomy, robotaxis will dwarf Tesla's entire existing business long term, well past 5 years, but long term. Optimus is going to make Tesla's entire business, including autonomy, robotaxis, everything, literally look like a rounding error. So if you think a $7, $8, $9, $10 trillion valuation for this company in 2029 sounds absurd, try Tesla's valuation in 2039 and 2049 with the successful deployment and scaling of the humanoid robot. I dare ya. And now, just finally, the risks and limitations of our Monte Carlo model. ARK's 45 independent variables cover scenarios that we believe are plausible outcomes for Tesla over the next 5 years. An unexpected event, by the way, here's an example of an unexpected event. The 2020 scamdemic, the fascist factory shutdowns, insane financial stimulus, interest rates through the roof, etc. So the point is, unexpected outcomes do occur. An unexpected event such as Elon Musk's sudden departure from the company or a natural disaster or another scamdemic could throw these outcomes off considerably. Conclusion. Based on the updates delineated above, ARK's price target for Tesla is $2,600 per share in 2029. Remember folks, years ago ARK Invest came out with what sounded like an absolutely ridiculous 5-year price target for Tesla, and it turns out that Tesla actually ended up exceeding that valuation within less than a 5-year period, after everyone laughed at ARK Invest 5 years earlier for going, that's ridiculous, that's never going to happen. Just saying, they do have some credibility here. It's important also to distinguish between ARK Invest's valuation model versus their trading activity in the ETFs, because these two are not the same. ARK's primary business is managing money, investing, and trading. Buy this, sell this, no capital gains tax because of the way they run their business. Cool story, bro. The activity of the ARK funds is purely trading. However, the valuation models have underlying assumptions that we too can examine. The way one should be measuring ARK in terms of credibility is looking at their prior estimates in different scenarios for Tesla versus the reality, as opposed to what's being bought and sold in ARK funds in any one particular moment. Our bear and bull cases suggest that Tesla could be valued between $2,000 and $3,100 per share in 2029. If you guys would like to see my own estimates, by the way, again, they are available in my Tesla valuation model. Not only do I have a bunch of different scenarios where you can read every assumption, the bear case, the bull case, but out of those comes an expected fair valuation in each scenario. Then I probabilistically weight those for a weighted average price target. Key differences here include me considering Tesla bot and FSD licensing, whereas ARK exclude them. Also, including growth in Tesla's energy business, which is an exclusion from ARK. And again, if you want access to this, you can join Patreon with the link in the description or the pinned comment at the investor level and above. ARK has also published their entire simulation model on GitHub and invites everyone to test the assumptions and create visualizations from the simulations. And I will be covering that in a future video. Now, this feels like a fork in the road moment. The amount of FUD right now, the fear, uncertainty, and doubt around Tesla, Elon bad, Elon incompetent, and so on, is just outrageous. I mean, it's next level. Many extremely intelligent fund managers who aren't just virtue signaling to their woke clients have unloaded their entire position in Tesla stock, or almost their entire position. Just keep 3 or 4 shares so you can keep appearing in the media talking about the fact that you still own Tesla and that's why you're there. People are panicking. There's a narrative that hybrids are the future, that EV sales are collapsing, Tesla margins are going to zero, companies going bankrupt, the competition's coming. It's always a variation of the same kind of themes. So I just want to plant a flag, and I'd like to revisit in 5 years, maybe 5.5, so I can give 2029 a full year to play out and just see what actually happened. Because right now, the perception, I don't think you'll find too many people outside the Tesla bubble who would imagine Tesla's valuation doing more than a 10x between now and 2029, and that's their bear case, let alone a 14, 15, or closer to 20x. Of course, there are some folks, like myself, who continue to buy the stock hand over fist, and the 2 key reasons I continue to buy Tesla stock with literally every spare cent: 1, autonomy, and 2, the humanoid robot. I don't have a 5-year investment horizon, although I model out 5 years, but I model out 10 years and I also go beyond that. This is why I personally believe it is so important for everyone who owns Tesla stock or is even thinking about it, considering it as an investment opportunity, to build their own valuation model, a probabilistically weighted model, just like ARK, a watered down version of that. So you've thought through different scenarios, weighted them according to your best estimate for probability, and then you have some guidance as opposed to just sticking your finger in the air. Which way is the wind blowing? What's trendy today? Is Elon bad? What stock should I say I'm buying on my YouTube channel and talk about it so I can get people to view and then sell it, then buy it, then sell it, then buy it, just to keep getting... I don't know what I'm talking about there. I think what I was trying to say is you should all have built your own valuation model. You may have very different assumptions to ARK Invest, but that's the whole point. You're flying blind if you haven't tried to value this company and thought about, will they solve autonomy? When will they solve autonomy? How much would they charge per mile over the long term? What's their profit on that? How much are they charging for FSD subscriptions? Will they license FSD? When will they license FSD? To how many vehicles will they license FSD? Will the humanoid robot be successful? How many will they build? How many will they sell? You get the point, right? You've got to go through this exercise, otherwise you're just flying blind. You might have noticed that I talk about Tesla every fucking day. You did notice, right? No, of course you did. And many of you watch content about Tesla every fucking day. My conviction in this company and the future has only grown, which is why I'm still banging the drum, still talking about this company, and still buying the stock with every spare cent out of interest. For those of you who've built your own Tesla valuation model, what's your expected fair valuation for Tesla in 2029? Let us know in the comments below. Want more content? Early access? Bunch of perks? Click the links in the pinned comment. AG1 is awesome. I've been taking it daily now for more than 3 years. It's a great way to fill in nutritional gaps. It's packed full of vitamins, minerals, and whole food source nutrients, plus has prebiotics, probiotics, and adaptogens to improve gut health, regularity, and help your body handle stress. I'm always looking for an edge to help me feel and perform my best, which is why I haven't missed a day of AG1 for more than 3 years. And I haven't missed a daily video in more than 3 years. Must be a coincidence, right? Just try it and see how you feel. Click the link in the pinned comment or head to drinkag1.com/SMR and get yourself a free 1-year supply of vitamin D3 plus K2 and 5 travel packs. But don't take my word for it. This is what viewers of the channel had to say after trying AG1. I feel like I have a lot more energy since I started on AG1. By the way, viewer, that makes 2 of us. On to the next. Just got my AG1 in the mail. Legit feeling the effects after day 3. This viewer's been taking AG1 for 8 months and says, what an investment. Another. 3 months ago, I started AG1 and have been enjoying the evenness of alertness and energy that lasts the day. I just started the wife on it too. Are you convinced yet? I mean, hey, it's worth trying, right? Click the link in the pinned comment or head to drinkag1.com/SMR or I can keep going. Plenty more to come. This viewer, after about a month on AG1, Definitely a lack of fatigue in the afternoon. Pleasant side effect is that my coffee intake has imploded and is almost down to 0. One more? Yeah, why not? I honestly feel younger and will be continuing to use AG1. This stuff really is crazy good. I didn't think it would be, but this stuff is awesome. It really is what everyone is saying. One more? Don't mind if I do. I've just received my 3rd month supply. I've drank it every day. I have so much energy throughout most of the day. I'm productive, started a new business, started socializing, refurbished a boat. It's no coincidence. Thank you for your persistence, your integrity, and your insights. Now look, these are not my words. These are not my testimonials. This is what you guys and girls are saying. Maybe it's 100% placebo effect. But even if that's the case, I think it's money well spent. Click the link in the pinned comment or head to drinkag1.com/SMR and get yourself a free 1-year supply of vitamin D3 plus K2 and 5 travel packs. If you're still skeptical, hey, I don't blame you. Everyone on the planet seems to be promoting AG1 now, but guess what? They weren't nearly 3 years ago when I had this to say privately to my Patreon audience before there was a relationship, when I was asked about what I was doing for my health, energy, and so on. Just sharing my genuine, honest thoughts about a product I'd recently discovered that was at the time called Athletic Greens, now AG1. If I could only recommend one supplement to take, Athletic Greens, and I'm not getting paid to say this, Athletic Greens is a fucking game changer. I cannot believe how effective this is. No longer having a lack of energy in the afternoons. It's fucking amazing. There's only one thing to recommend, seriously. Try Athletic Greens. You won't go back. So obviously, just like Elon Musk is a liar, a fraud, a con man, a scammer, a fake engineer, and Tesla's going bankrupt, you shouldn't trust that guy from about 3 years ago who, without any financial incentive, was promoting this product to his audience on Patreon when they were asking about health and what he's doing for supplements. Because obviously, there was some other reason he recommended that, obviously. Not sure what it was, but don't trust that guy. And all the testimonials, like my mental game has improved with AG1. I feel better than ever. I'm so impressed I've bought it for both my parents. I feel more focused and have better digestion. Incredible difference. No more afternoon fatigue. It's relieved gut issues. These are all just obviously fake testimonials from fake people. Right? Wrong. Just try it. Unless you hate yourself. If you hate yourself and you don't even want to risk possibly feeling better, this is not for you. But for everyone else, what's the worst that could happen? Try it for a month. See how you feel. It's a no-brainer. Just click the link in the pinned comment or head to drinkag1.com/SMR. You'll get a free 1-year supply of vitamin D3 and K2 plus 5 travel packs. And you'll take the colossal risk that maybe you might have a similar experience to some of the people whose testimonials we've read in this video.